So I realized I'm a little bit late to the party because all the cool kids have already made a video about it. And I wasn't going to make a video because I had already talked about this stock in an earlier video, but I changed my mind. And the reason why I changed my mind is that several major things have happened since I made that previous video talking about this stock. And the biggest thing that comes to mind is, of course, the huge decline in stock price. So when I made that video, I think it was trading in the mid teens or around there somewhere. And then it crashed all the way down to $8 per share, or I think it was even lower at one point, before bouncing back to around $12 a share and settling where it is now. Now, I'm making this video on Easter, so happy Easter, everyone. And we'll have to see where the stock shakes up tomorrow. It's Right now, the stock futures are down, so it might be a red day tomorrow, or it might as well be another green day tomorrow. I have no idea. The stock market is really volatile these days, so who knows where the stock will end up tomorrow. But I'm making this video to talk about all the things that have changed regarding Carnival Cruise and to talk about the $1 million question, which is, will I buy more Carnival Cruise stock? So stay tuned. This is Watch This Stock. So let's jump in and talk about all the updates and all the things that have happened since I made that last video. Besides the huge crash in stock price, we saw that Carnival Cruise stock bounce from $8 to $12 really quick. And a lot of people are wondering why that is the case. $4 a share is really a lot. So a lot of people are wondering what inspired this huge big jump in stock price. And that's just mainly due to a lot of different things that I will talk about right now. So one of the biggest news that came out is that the Saudi Arabian Wealth Fund has taken 8.2% stake in Carnival Cruise stock. And this is a big deal because if you think about it, 8.2%, if you look at the market cap of Carnival Cruise, that's a substantial amount of money. That's almost $1 billion. So the Saudis are pouring a lot of money into Carnival Cruise. And that's sort of a vote of confidence, if you will, from such a large organization as to where they think that Carnival Cruise is going in the future. Obviously, a lot of people have been talking about potentially that Carnival Cruise might go bankrupt. Well, clearly, Saudi Arabia doesn't think that they're going to go bankrupt. Otherwise, they wouldn't be pouring so much money into this stock. Clearly, they see some sort of value in this stock. And maybe that's a good sign for us shareholders as well. If you do have Carnival Cruise stock, that you're not the only one who thinks that this stock might bounce back. And you're not the only one who thinks that there might be a lot of upside for this stock in the future. And the other big news is that they recently did a capital raise of around $6 billion. Now we're going to break down all the different forms of capital that they raised because they used a mixture of bond and equities. So to summarize, they raised $4 billion in senior secured bonds. Now, if you don't know what senior secured bonds means, senior just means that in the case of a bankruptcy, the people who hold the senior bonds, they'll get paid first. Secure just means that it's backed by all their plant property and equipment and all their assets. So in Carnival Cruise's stocks case, it would be backed by the actual cruise ships and all the facilities that they have to house the cruise ship or whatever assets that they have. So it gives investors a little bit more security just because they think that, if the stock goes bankrupt, then they could collect on those assets. And these bonds are due in 2023, which gives Carnival Cruise enough room to potentially get their business back once this whole pandemic thing is over. But the kicker is that these bonds are at 11.5%, which is a really high interest rates if you know anything about bonds. Let's say you buy a GIC, or as you Americans call it, CDs or certificates of deposits. Maybe you'd get 2-3% per year maximum. Well, these bonds that Carnival Cruise just issued are at 11.5%, which is pretty steep. But I guess that's the only way that they could use to entice investors into giving them more money, because obviously this is a stock that has been hammered really badly. And to add on to that, they also raised $1.75 billion in secured convertible notes. So what these notes are, what convertible means is that they can convert these bonds at any point into stock. And the convert price is $10 per share. So these investors that bought these bonds, if at any point they want to convert these bonds into shares, they could do so at $10 per share. Now, because of the convertible nature of these bonds are only at 5.75%. which might seem kind of low compared to the 11.5% that we just talked about. But keep in mind that when you sell convertible notes, it's sort of like you're selling a call option with the note, right? So when the investors, if they find that they can make more money by converting it to a stock, let's say the stock skyrockets back to wherever it was, which was like, I don't know, $40 or $50 per share or something, they still have that option to buy the stock at $10 per share and convert their bonds into stock. So it's sort of like Carnival Cruise has sold a call option with their bond when they sold this bond. And lastly, they raised $575 million in equity. So what this means is that they just issued new shares, and I believe that the price that they issued was at $8 per share. So it was pretty cheap, and whoever bought this stock is already up quite a bit because it popped from $8 back to $12. And usually as an investor, I don't like equity raises just because it dilutes shareholders, right? So for those of you who don't know what an equity raise is basically when the company just creates new shares basically out of thin air and sells them. And then for whoever who has the shares currently, then their shares will become part of a larger pot, right? So the amount of shares outstanding will increase. So the shares that you have, if you're already a shareholder, it becomes worth less. And now this is called shareholder dilution, and it really sucks for current shareholders. But hey, what are you gonna do, right? So if that's what it takes for the company to survive, then I guess that go ahead and do it, right? So if the company goes bankrupt, obviously as shareholders, you might not get paid anything, right? Because all the senior bondholders, they're the ones that were the bonds that were just issued, they would get paid first. And then as shareholders, you probably, in the event of a bankruptcy, especially in a company like Carnival Cruise, you probably won't have anything left over. So yeah, that pretty much summarizes all the things that have changed since the last time I talked about Carnival Cruise, and why the stock has popped from $8 per share back to $12 per share. Now it's time to answer the $1,000,000 question, which is, will I buy more CCL? And my answer to that is maybe. I'm saying maybe because it's already a pretty large part of my portfolio. And I'm not really rushing out to buy more because this is a bit of a spec play. This is a company that could actually go bankrupt. Personally, I'm not really afraid that they will go bankrupt though, in the short term at least, just because I think with this new capital raise that they will actually have enough money to last for the short term. And by the short term, I mean like 6 months to a year. They should be okay. But in the long term, will their business bounce back? That is the biggest question, right? So if their business starts bouncing back, then I think that it could be a really interesting case where there's a lot of upside in this stock. I mean, even if they get back to half of where they were on their all-time highs, then I think that you would still be looking at a $20, $30 per share stock, which is still a pretty decent upside from where it is now. And keep in mind that this is a business that usually brings in $2 to $3 billion per year in terms of revenue. So it's not a small business by any means. Now, I'm not sure if any of you have been on a cruise ship, but if you've been on a cruise ship, you know that the business model is pretty sound, right? So they have multiple ways to get you to spend money after you've purchased your ticket. So they might have a more luxurious buffet that they would charge extra for you to go to, or they might have a casino on board where, casinos are big money maker because they all do the math beforehand and stack the odds against you and put everything towards the house's favor. So casinos are a big money maker, and there's just so many opportunities for Carnival Cruise to get you to spend even more money when you're on board, which is a part of their business model. So it's a very profitable business model. All they have to do is get attendance back to where it was, and then they would be making money again. Now I realize that obviously that's not going to happen anytime soon, right? They're not going to be able to get their attendance back to where it was anytime in the near future. I recognize that. But even if they were to do some cruises and get just a small proportion, like 20, 30%, or maybe even 50% if they're lucky, of where their ship's capacity was before the crisis, then I think they'll be well on their way to becoming a $20, $30 stock very soon. And I think another reason why this stock might be kind of enticing is that the risk to reward ratio has changed. So a lot of people might be criticizing me going, oh, you didn't buy the stock when it was $8 per share, but now it's come back to $12 per share. All of a sudden you want to buy it now. and or at least you're thinking of buying it. Well, what I have to say about that is that the equation has changed, right? So when it was at $8 per share, it was all just doom and gloom, and we were really looking down the barrel of bankruptcy. No, but now I think that they've done this new capital raise, and the news has come out that the Saudi Arabian Wealth Fund has invested a significant chunk of money into them. So I think that the risk to reward ratio has changed quite significantly from where it was just when it was $8 per share. So now it's actually, even though the price has gone up quite a bit, it's still an enticing play. And I might add more. I don't know. I think that it's very risky, and I don't want to devote too much of my portfolio to it. But let's say if it goes back down to $7 or $8 per share or something around that, it might be just too hard to resist, and I might just have to pick up some more shares. The thing with Carnival Cruise is that Wall Street is really pricing this stock for bankruptcy, right? So if you look at the PE ratio, it's now under 5. So if you know anything about PE ratios, those are bankruptcy PE ratios. Wall Street is just looking at it and thinking this is just doom and gloom, and this stock is just super untouchable. But I think that if you look at the super long term, and by super long term, I mean like 10 years out, I think this could be a brilliant opportunity. And I know a lot of you who watch this channel are probably also watchers of Jeremy from Financial Education. So I was watching that video from Jeremy about CCL, and he brought up a good point. And what Jeremy was saying in one of his videos, at least, was that all the people who have loaned money to CCL, they don't really want to collect on these cruise ships, right? So if in the case that CCL goes bankrupt, they don't really want to have to repossess these cruise ships and try to sell these cruise ships for pennies on the dollar. So it really doesn't make sense for all the creditors of CCL to try and force them into bankruptcy when they know that, if they cut them some slack and extended some loans and just bail them out, then CCL could get back into operations and start generating those $2 to $3 billion profits per year again. And I think that that's a much better deal for both people, right? So for both the creditors and for CCL, it's a win-win for both. So the creditors get to collect all these massive coupon payments from their bonds, which is, I mentioned earlier, is at 11%. Or something crazy like that, right? And then CCL get to avoid bankruptcy, versus the alternative is that all these creditors, they say, I want my money now, and then they force CCL into bankruptcy, and then they would have to possess all these cruise ships and then try to sell these cruise ships. And obviously these investment banks, they don't know how to run the cruise ships, so it's very unlikely that they'll start their own cruise business on their own. So they have to try and sell these cruise ships, and I don't know who the hell is gonna buy cruise ships these days, especially in the middle of a pandemic, right? So they're gonna have to sell them for just pennies on the dollar, and that's not a good deal for them. But again, disclaimer, this is just my opinion and this is just what I'm doing. This is not financial advice. Please do your own research before investing, and if you lose money, don't sue me. If I buy more CCL, I'll be sure to keep you guys updated. So yeah, that's all I wanted to talk about today. I promise that these videos will be short and sweet, so I'll leave it here. And yeah, I'll see you guys in the next video. Bye-bye. So I think that the risk to reward